GM, good morning. Welcome to the Milk Road Show, the daily crypto show where every chart is going up. Your bags are starting to feel heavy again, and I know you are starting to feel like a genius. I'm your host, Jay Hamilton. It's Monday, May the 12th, and everything is pumping. What a week it's been. Green charts all around. ETH is up almost 50% on the week. Bitcoin back above 100K, touching around that 103K. Lots of top meme coins, blue chip meme coins are pumping. Some bunch of altcoins are pumping. We're going to dive into all of that. What's happening? Why is it happening? What are our thoughts? Where do we think it's going? Also, sentiment continues to be down, though. That is for sure. There's still not, the vibes are not back yet. Why is crypto sentiment down? We're going to talk about that. And we got to touch on last week, Warren Buffett announced that he's retiring at the end of 2025. What that means is one of the greatest investors of all time is retiring. So I'm going to do a little walk down memory lane of some history lessons from Warren Buffett on what you can learn from one of the best common sense investors of our generation. To break it all down with us, we're joined today by Byron Gilliam, market strategist and newsletter writer at our friends Blockworks. Before we jump in and hear from Byron, if you guys are swapping right now, make sure you check out Milk Road Swap. It is our swap where you can swap on ETH and on Solana for some of the lowest fees in the space. We set this up not to make money, but just have a cheap place for our community to swap. So if you're making trades and you're swapping, check it out. Visit milkroad.com and hit the swap to swap today. Today's episode is brought to you by Ledn. Get cash without selling your Bitcoin. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. Without further ado, Byron, welcome to the Milk Road Show.
Hey, Jay. Thanks for having me on.
Absolute pleasure, my man. Okay, let's start with the just getting what's your take on the current market, and let me set this up for you a little bit. Let's talk about the past week and the green charts, but then let's zoom out a little bit further. We got a lot of macro noise happening right now, and I'm curious how you frame the past week within basically the past few months ever since Trump took office and all of the macro stuff that's happening right now, and whether you think this past week is sustained bullishness or maybe a little bit of a fake out right now.
Yeah, that's a tough one. I've been I started trading equities in 1994, like trading them professionally. So I've seen like LTCM and the .com boom and bust and the great financial crisis and the pandemic, and this tariff market has been, I think, the most confusing one that I've seen. Like it just has not made a lot of sense to me. I guess maybe until yesterday. I guess like if we're really not going to have a trade war with China, then maybe like nothing has happened, right? And the markets are a little bit above where they were on Liberation Day, which before this weekend just completely baffled me. It just did not make sense to me. And I was kind of rethinking like, how to understand markets, whether, I'm a big believer in the efficient markets hypothesis. Like I think the markets are very good at pricing things in. But then it was like, when we were rallying the last few weeks, I just thought that the markets are just failing to price in tariffs. But now, as of yesterday, maybe there are no tariffs, or maybe they're just so small that they don't matter. So now I think I'm back to thinking that markets are super efficient, and they had just figured out that Trump didn't really mean it with the tariffs, and we can just go back to normal now, I guess, is my big picture take.
When you for everybody listening, you're mentioning yesterday. What happened yesterday that made you change your view?
Just the outcome of the Switzerland talks with Besant and his China counterparty, which it's kind of like no real news. They're just talking about talking, I guess. Well, no, I guess they did actually lower the tariffs, didn't they? So I don't know. It feels like the markets had that priced in the entire time. The markets are up a little bit today, but not like that dramatically. So I guess the markets just figured it out. The hive mind of markets figured out again that the tariffs were not going to stick around very long. And if that's the case, then why not just go back to the all-time highs? I guess.
I mean, it's certainly, we started off the year. It's very hard as an investor, and I'm sure you appreciate this, to not get caught up in the moment, right? It's very easy to get caught up in like the dailies and the weeklies and forget the bigger picture. And we came into this year with a bigger picture, and we still have that bigger picture, which is very bullish for crypto, right? We have so much shift happening, so many tailwinds, the regulatory shifts, the adoption that is happening in meaningful ways with stable coins and so much product market fit. And then we had tariffs take over the headlines, and it was like we all thought, oh, it's over, it's all doom and gloom. But you can forget that bigger picture, and it can warp your mind and allow and make you focus too much on the short term. But as you said, the long term is, I mean, in my mind, is still incredibly bullish. And I think, if we do, good chance we make it past tariffs with, oh wow, that was nothing, and something that we all forget about and never think about again. I hope that's the case. Although there is a lot of data saying that there might be, definitely a lot of the survey data coming out right now is quite concerning in the way that tariffs could impact the economy. What's your view on, what's your base case? Are you worried about tariffs and the long-term effect? And do you think that we could go towards a recession, or do you think that it's all going to be much about nothing?
Yeah, before this weekend, I probably would have like personally put like 100% probability on recession, which is silly. You'd never put 100% probability on anything. But after this weekend, I have no idea. Like it's just so hard to. It's just so hard to know. I was kind of curious to see like if we got some version of tariffs that were, kind of smoot hawley level tariffs. Like if the economy could avoid the U.S. economy could avoid a recession, even in the face of that. I was starting to wonder, like, are there ever going to be recessions? Like, maybe not. Yeah, the last two recessions that we had was the pandemic, and the recession lasted for like 5 minutes. And before that, it was the financial crisis, which was a long time ago, right? And before that, it was the dot-com bubble, which was just kind of a tech recession. So it kind of feels like there just aren't recessions anymore unless something really weird happens, like a pandemic or a strange financial crisis. And if like even if tariffs, if a giant trade war also cannot throw the economy off, then just maybe there are no recessions anymore,
Mhm.
which makes equities look like a risk-free asset, which I think is something that might make people rethink how they should be priced. People are always saying that equities are expensive, and versus history, they are expensive. But if we don't have recessions anymore, then they should probably be even more expensive.
Mhm. Mhm.
And then, but I guess your question was more about crypto. Crypto is like I've struggled to think about crypto in those terms because 50% of crypto is Bitcoin, right? And is Bitcoin a risk on asset or a risk off asset? Like depends on the day or the week. It's kind of hard to think about it. Like I hold a little bit of Bitcoin, not a huge amount, but the way I look at it is I look at it as like a credit default swap against hyperinflation. So, I view in Bitcoin as insurance against the very worst outcome for the US dollar and the US government. So that for me is a risk off asset, right? But even recently, it's been trading as a risk on asset. Like, it's up again this morning because the news is good. Like, I own Bitcoin as a hedge against bad news,
Mhm.
but it goes up when
Both
there's good
ways
news,
sometimes.
which doesn't totally make sense to me.
Mhm.
Um,
Mhm. I mean, it's certainly in a, like, if we were to put it on a spectrum, right, from like it being a purely risk on asset to it being a risk off asset, right? It it definitely is headed in the direction of being a risk off asset, but I think it is still in the middle, or maybe a little bit towards being a risk off asset.
yeah, yeah, it's somewhere in between, which is interesting. I think a lot of that is just because on weekends and
Mhm.
evenings when the market is closed, that's all you've got to trade, right? If you want to,
Mhm.
if you want to take some risk off on a Saturday night, then like Bitcoin is the only thing trading, so that's what you sell.
Mhm.
And I think it might get interesting if equities start to trade on chain. Like Robinhood announced last week that they're going to offer blockchain-based equities to European customers, and people like Robert Leshner and Kyle Samani think that every single asset is going to trade on chain. And if everything's on chain and everything is trading 24/7, then you won't need to sell Bitcoin when you're feeling nervous on a Saturday night. And then that would help.
Did Robinhood say when they are going to start that?
I
And
think
like
they
how
said,
many assets it'll be? Like
no, I don't think. I think they just said they're working on it.
it's just a it's an announcement right now, right? It's not a you
Yeah, I
know,
don't really understand how it works exactly either, or how it doesn't work at all at the moment. I don't really understand how it would work. Like, can you just put equities on a blockchain and trade them? Are they going to be wrapped equities, or are they going to
yeah.
be the real thing? And like, but surely you still need to be KYC. Surely you still have to have a brokerage account and stuff like that. And then who's providing liquidity on Saturday night? So I don't know. I really that
All
doesn't
good
doesn't
questions to ask. Yeah.
doesn't
I think I
totally
think
make sense
I
to me.
think I think it is very clear that equities are coming on chain. One of the best use cases that crypto has that we have not taken advantage of yet is 24/7 trading, right? And we sorry, I shouldn't say we've taken advantage of that for crypto, but for the rest of the world. I mean, we spoke to Vlad, the founder of Robinhood, maybe a month ago. He came on the show and he talked about how when they went from they went to 24/7 5 trading, and that lift was absolutely massive for them to do that, to get to 5 days a week, right? And now that they can go to 7 days a week and allow that on potentially a lot of different equities, maybe all equities that they offer. I'm not sure, as you said. I also don't know the technical components of this, nor do I know the exact launch plan and when the dates of when this is going to come out or which equities it'll include. But that will, when that happens, that's why all this stuff, it's really directional, right? It will happen. And when it happens, it is going to allow better trading, more efficient markets, right?
I don't. I think I would take the other side of that. Like
Really?
I think I don't. I think 24/7 trading is a flaw and not a feature. Like just
Why?
personally, I have half of my savings basically in real estate. Not because I think real estate is that amazing versus equities or whatever, but because I can't sell it. I can't panic out of it when the market goes down on tariffs or whatever, right? And I've like I said, I've been a trader for 30 years and I still do this stupid shit that I do when I then 25 years ago. Like I still sell when I should be buying and buy when I should be selling. It's just, human nature and behavioral finance. And I can't do that with real estate, which is why I love it. But I'm not the only one. Like, private equity, I think, gets a premium over public equities because people love that it's not mark to market. They can't see when they're losing money. They'd rather just get a quarterly statement from their private equity fund or saying, hey, you were unchanged this quarter, even though the stock market was down 30%, but you were magically unchanged, and they love that. So I think like illiquidity and not being able to trade it is the feature, and should get a premium. And crypto is the absolute worst for me. Like, one of the reasons I don't own a lot of crypto is because you can change your mind any second of the day. So like for me to buy a crypto and then to hold it for a long time is just like really hard, because any time that any time of day or night or weekend that I have, a momentary loss of confidence, I can just open my phone and sell it.
It's an
So
interesting point. It requires a different, it's a new type of investor and a new type of trader, a new type
um,
of discipline, a new type of focus. You can't you can use, and we're going to talk about like Buffett a little bit later in the show. You can still use a lot of the investor knowledge and investor learnings from the many decades, in Buffett's case, 7 decades of his trading and investing experience. But as you said, there's some new parts of markets, some new parts of tech are allowing us to do things which put investors in maybe too much flexibility, too much opportunity, which makes
and there's
makes it
also
difficult
just
for
the
them.
the more practical issue of liquidity. Like, I used to trade European equities in London when they changed the trading hours. Not even, I can't even remember what the actual hours are. I think maybe they they started opening UK equities an hour earlier so that they would open the same time as European equities. And you did not want to trade UK equities in that first hour of trading. You could never ever be right. Whatever you did, it was wrong because the liquidity was not there and the bid offer spreads were a mile wide, and you were going to trade with a market maker, and the market maker was going to win every single time. And that was in UK equities at like 8:30 in the morning on
Hmm.
a Tuesday. So if you start trying to trade, whatever U.S. equities at Saturday night on at 1 in the morning, you're going to be wrong every single time.
Right. Right. Yeah, there's certainly, I mean, this is the same is true in crypto today. There is better times to trade crypto because there's more liquidity, and there's worse times to trade crypto on a weekly basis, right? So, and those are simple hacks, right? Those are simple tricks that a lot of people would not know. So, uh, maybe we should make a newsletter about these timings, Byron. That's what we got to do. Let's go to sentiment. Sentiment in crypto, is still struggling. I mean, definitely came back last week. Do you think that sentiment should be this low in crypto as it is right now in crypto Twitter, or do you think it's come back actually just in the past week and we're back to where we were before?
It's starting to come back just because sentiment is a lagging indicator. Sentiment just lags prices, right? And prices of Bitcoin and finally ETH are good. So sentiment's getting a little bit better. But yeah, I think it depends how you look at it. So on the one hand, like crypto is doing much better than you would have ever guessed, right? Like the crypto market cap is back over 3 trillion. Regulators are not just sympathetic, but also encouraging it. We've got all kinds of institutional adoption by Visa and Mastercard and Stripe and BlackRock. So, on the surface, there's just a lot of things that are going well and better than expected. But then, there's two other things in my mind, or well, three other things maybe. One is that there's just a lot of grifting going on, and I find it pretty dispiriting. The people that have made a lot of money over the last year or so are not really people that are creating value for the world. They're just creating meme coins and then buying them a minute before they get publicly launched and then selling them 2 hours after they've been publicly launched. So I think that's dispiriting. The stuff about like the Trump meme coin and the Trump dinner is just very grifty and doesn't make anybody feel good about crypto, I don't think. And then also it's just we're still struggling for utility. Like, the industry is, the industry is still mostly downstream of meme coin volumes. If we didn't have meme coins creating however much revenue they do on Solana or something, there just wouldn't be a lot going on. So I think that's part of the sentiment as well.
It's 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 interesting to bring up the question of, is are meme coins good or bad? Is kind of where my mind goes to when you talk about meme coins, which is a great debate because there is there's no debate that meme coins have extracted a lot of value, and extractive tech is not what we are here to build. But there's also meme coins have allowed us to test a lot of the tech and test it at scale and prove that it works and prove that it is ready for things like 24/7 on-chain trading. So it is a what's your if I asked you the direct question, meme coins good or bad for crypto, what would you say?
Yes. Yeah, I mean, yes, they're bad because they're extractive, like you say. I mean, they are a negative sum activity, and I am fine with negative sum activities. Like, I enjoy betting on sports once in a while. I enjoy, which I know that over time I'm going to lose money. I enjoy playing poker, even though I'm bad at it. I enjoy trading meme coins occasionally, but one that's just entertainment, which is not a super high value use case. I don't think, like, casino business is pretty big in the world, but it's not like a growing, exciting industry. And two, meme coins are just way more extractive than Vegas or sports betting. And also, they're more opaque about it. Like if you go to Vegas, you know exactly what your odds are. If you're playing blackjack, you know how to play blackjack. You probably have, the odds are probably 1% in your favor. If you're playing roulette, then you know that the odds are 6% against you or whatever. If you're playing slots, you know you're just paying, a 7% fee for the entertainment of playing slots. But in meme coins, you don't know what the odds are, and chances are that some insider has sniped whatever meme coin right before it's going to be launched, and then they're dumping it on your head when you find out about it 2 weeks later. So yeah, it's a negative sum activity, which in theory is fine as entertainment, but it's too negative sum, and it's just not that fun really. But also, as you say, like it's stress tested the systems, and it's funding a lot of the industry, which I think is a good thing, and hopefully it will lead to more productive stuff. But I think maybe to go back to the sentiment thing, I think maybe part of the sentiment is that it's just kind of taking a little bit longer than people would have hoped for the more productive stuff to come around.
I mean, the it always takes longer to build the real use cases and the real products. The speculative stuff is always easier to build. That's why we had the dot-com bubble, right? Like you can build speculation very quickly because everybody can, speculate just with a guess and with some money in their hands. So it's no surprise that that stuff came along first. It has certainly had its fair share of damage, but I think we're coming out the other side. We're seeing the light at the end of the tunnel. I want to talk about Ethereum and its pump right now. It's up 40% in the past week. And then I want to chat about Buffett retiring and your thoughts on looking back on some of his wisdom. Before we do, we just need to take a quick moment to hear from our sponsors who make this show possible. Selling your Bitcoin should be a last resort when you need cash. That's why there's Ledn, the trusted platform for Bitcoin-backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over $9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com/Ledn, spelled Ledn. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security, backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Steakhouse Financial. Put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCS USDL is gaining traction at milkroad.com/Coinshift. Okay, ETH. ETH is just catching a bid right now, up 40% in the last 14 days. Up 40% in the last 7 days, actually. Thoughts? Why is ETH catching a bid right now?
I was very surprised by that. Not what I was expecting. I would guess just because it got oversold and people got too negative on it, and now maybe because risk assets generally are looking better, people are scrambling to catch up. I'm not really sure. I mean, the only thing the rally seemed to be coincident with Vitalik's post about simplifying Ethereum. I struggle to imagine that was causal to the rally, but coincident is usually the best we can do for explaining moves in markets anyway. So I guess we could go with that. But yeah, I don't know. Maybe otherwise, I guess maybe there's more of a consensus within Ethereum that that they need to prioritize the L1. So maybe people are getting excited about that. I'm not really sure. But yeah, I've found the rally very, very surprising.
Yeah, it's certainly. I mean, it's great to see ETH rally like this, obviously when such a major asset rallies in the space, it gets everybody excited because so many people have exposure to ETH, and ETH has struggled so much. So it definitely brings a lot of enthusiasm. The natural comparison is to compare ETH to Solana and to see, how are those two doing against each other. And in the same period, Solana's only up 20% in the last, like 22% in the last 7 days. So that's the standout, right? Is when you see ETH outperform Solana or Solana outperform ETH, you think, okay, like what's going on here? Why is one outperforming the other? And I think to me, what stands out is, yeah, you nailed it. There's not a fundamental change in ETH that would drive this, right? There is nothing that's happened in the past week on the fundamental level. Sure, Vitalik made that post. Sure, there's new executive directors at the Ethereum Foundation. Yes, they're going on tour right now and they're speaking on lots of podcasts. Blockworks just announced, I think you said, Yano said you guys are going to start an Ethereum podcast. So there's Bankless is getting real back into the Ethereum world, and they're pumping out all Ethereum content again. So there's a lot of marketing stuff happening around ETH, which could lead it to catch a little bit of the narrative. I tend to agree with what you're saying, though, that like I think ETH got down so bad. I don't think there was any other sellers. I think it hit its bottom. There was nobody else. Everybody had capitulated. And when things came back, it kind of makes sense that it would be one of the ones that has the potential for a bigger bounce back, because when the narrative switched back, when everyone gets more bullish, when we go more risk on, something that had been down so bad can catch that bid on the way back up. I would say it doesn't lead me to say, oh, Ethereum's going to outperform from here, right? I'm still bullish on Ethereum, but the big question in my mind, and I don't know if you have a take on this, but is the natural question that I can't help but avoid when I think about Ethereum is how underpriced. If you were to say that Solana and Ethereum have very similar fundamentals and very similar product market fit, and we don't yet know which one of those is going to be the runaway L1 chain and is going to be the one that wins. It's not clear. It's still way too early. Then you would say, oh, well, it makes sense that Ethereum and Solana could trade around the same, right? That they would be similar market cap. But Solana is still 3 times lower than Ethereum, even less now, actually, that Ethereum has had this pump. Like today, Ethereum's market cap sitting just over 300 billion, and what's Solana at? Solana's at 91 billion, so it's even slightly below where it was before. Do you think that they should trade similar? Do you have thoughts on that?
Yeah, that's an interesting question and one of the big questions in crypto. I'm a traditional finance guy, so I believe that the intrinsic value of any productive asset is the present value of its future cash flows. Like I think that's as simple as it is. Like I don't know why else an asset would be worth anything other than the present value of its future cash flows. And I think that ETH and Solana are both productive assets. So to me, it makes sense to look at them in that framework, that traditional framework. And if you do, then Solana looks like very cheap relative to ETH. Solana on its own is not very cheap. If you just if you annualize the current revenue that it generates, it trades on something like 150 times earnings or something like that, which is, that's maybe not the way to do it, because maybe crypto is just different. But for a traditional guy like myself, like I don't really see how else to do it. So Solana trades on like 150 times earnings, and ETH trades on like 800 times or something like that. So from my traditional perspective, yeah, they should.
They're both overvalued from your traditional perspective.
They're both overvalued, and Ethereum is more overvalued. But that's not necessarily the way to look at it. It might be that Solana's revenues that they're making now are just very low quality because they're all based on meme coins, and maybe meme coin volumes just dry up in the next couple of years, and then Solana will look much more expensive than it does now. And maybe even though Ethereum has lower revenue. Maybe the revenue is higher quality. Maybe it's more institutional based, so maybe it deserves to have a higher multiple. But yeah, if you just look at it, in terms of productive assets, then Ethereum seems expensive to me. And then you don't have to look at it that way. You can also look at it as money or something, but it's a $300 billion asset, so that's like that's a lot of monetary premium if that's what you're banking on. So to me, it seems expensive, however you look at it, unless you take the view that absolutely everything is going to be traded on chain, and Ethereum's going to capture a large market share of that, which is totally possible. And I guess maybe that's what the market's telling me.
Did Robinhood say where they're going to build, which chain they're going to build on?
I think they said they were gonna build their own blockchain, and I would guess it would be a layer two on
An
Ethereum.
L2 on ETH, maybe. Yeah.
But I don't know. I don't remember exactly, and I'm not sure. I would be shocked if they just did it straight on Ethereum, or I'd be surprised even if they did it on somebody else's blockchain. I feel like they'd want to do it on their own.
This brings up an interesting question, which is, you write for one of the leading crypto media companies, and obviously, you are surrounded by crypto all day, every day. But you don't invest tons in crypto. You still invest mostly in equities and real estate, as you've said. Why don't you allocate more to crypto?
Yeah, there's a lot of reasons. I'm not even sure. Yeah, I'm not even sure where to start. One is that I'm still uncomfortable with self custody. Like self custody just gives me the heebie-jeebies. I'm just scared I'm going to lose my seed phrase, and or I'm going to get phished. I'm not very good on cyber opsec. Um, I just feel more comfortable with my money in a Vanguard account because I know it's not going to disappear. But then, like when stablecoin yields were like 25% a few months ago, like I was like, oh, like it's like I'm making 4% in Vanguard, or I can make 20% in a stablecoin in a wallet. Like, okay, I'll have to put a little bit in. So like I moved some over, but I still can't I can't put a lot because I'm just worried it's going to disappear. That's one reason. Another reason is that I am a traditional guy and I like productive assets. Like I like Bitcoin as credit default insurance against hyperinflation, but I don't expect hyperinflation, so I don't feel like I need a lot of it. And then beyond Bitcoin, like I want something that's productive. And there's not that much of it in crypto, especially if you don't want exposure to meme coins. Like, uh, you know, more there are more protocols that are aiming to earn revenue and then aiming to return it to token holders, which I think is great. Like that's the kind of thing that I'm looking for. But most of them that are making revenues are making it from meme coin trading. Basically, I'm oversimplifying, and I'm not super bullish on meme coin trading because I don't think it's that fun. Like I said, like it's not as fun as sports betting. So I don't really want exposure just to meme coin trading, and it's difficult to find cryptos to invest in that doesn't give you mostly exposure to meme coin trading.
Mhm, mhm. Interesting. It's in the self custody point is a very interesting point because I agree that self custody is scary and dangerous, and that self custody there I don't think that most of the world will want self custody, which is why I think that when most of the world uses crypto, when they buy sell crypto, they won't do it in self custody ways. They're going to do it in their Robinhood account or Coinbase or wherever on some centralized exchange, and we can have a different discussion of whether that's good or bad, and the outcomes of that. But I do think that like the general self custody it's not convenient, and most people want convenience. That's what most people crave, right? The other point around the lack of real utility and real revenues in order to value, that point is the one that stands out the most to me, is that there's only a handful of crypto companies that are making meaningful revenue and that you can value in a traditional finance way, where you would say, yeah, this actually makes sense, right? You could look at some of the DeFi protocols, right? The Aves, the Makers, Jito, these types of protocols. You could look at them and you could say, okay, they make sense. what they're trading at in their valuation. But there's like 10 to 20 of those. And most of those, a lot of those have buyback programs, which also furthers their value. But as you said, there's not a lot of those. And so I think that what's so interesting to me is crypto is such a high risk space right now that we do not yet have the rest of the investment world and the rest of the $900 trillion in assets that are all around the world. We do not have them moving their money into crypto. Why? Because it's not understood. It's way too high risk, but we are seeing a graduation moment where what's happening right now is we're having more crypto companies that are going to IPO and go public. You can bet that those companies, when they do IPO, they're not going to trade at the volatility of crypto tokens. I doubt. I mean, we'll see, but I doubt it. I think a lot of those companies are going to be more stable. Like something like I think of something like a Circle, Coinbase, already public. It's volatile, but it's not as volatile as a lot of the crypto assets. So we're going to have this shift into more of the traditional markets, which I think will bring more money to crypto. So it's exciting. Let's talk about Buffett. You've learned a lot from Buffett over your career. He announced his retirement last week. He'll be retiring at the end of this year. What have you learned from Buffett? What words of wisdom from one of the best value investors of our time can you share with us?
Like my favorite is probably price is what you pay, value is what you get, which is just, a timeless reminder that the prices that things trade at are not necessarily indicative of the value of what they are. I like Buffett for a lot of reasons. One, I just admire his accomplishments. Like from 1965, I think Berkshire Hathaway is up 5.5 million%. and and the S&P in that time is up 39,000%. So he did 20% a year for 35. So that's like 60 years, basically. 20% a year for 60 years is just incredible. So, I admire that. And then the main thing I think is that because I spend so much time in crypto and on crypto Twitter and stuff, I get, I'm very exposed to the line of thought that valuation is a meme, and that even, the dollar is a meme coin and Berkshire Hathaway is a meme coin. And that stuff just really annoys me. And Berkshire is kind of the antithesis of all of that. Berkshire is kind of, and Warren Buffett. Warren Buffett is the opposite of financial nihilism. He believes in value, and he believes in stock markets, and he believes that capital allocation matters and that good capital allocation makes the world a better place. And I just really appreciate that and agree with it, and find it a nice antidote to a lot of the silly stuff that gets said in crypto.
To me, what's so interesting is that he did 20% per year compounding. And as a result of doing that for 60 years, or even actually, is it 60 years? I guess it's 60 years that
Well,
he
he
achieved.
was he was he was investing for like 20 years before he started Berkshire, but so
But he's
Berkshire
been
was 20% a year. His returns before Berkshire were even higher.
so, but that simple, it points out to me as an investor what you should focus on, right? Should you be focused on getting 100% on every trade, right? Like, which is the crypto mindset, right? There's this crypto mindset, which is that, and also I think that's the mindset of our culture and of our youth today is like immediacy, right? I need it now. I need it now. I need immediacy. I need this return now. And so we shoot for the wrong goals, right? We don't shoot for compounding. I don't think if you talked to a lot of the crypto traders and you said, hey, what's your goal for this year, right? And you said 20% returns, they'd laugh at you, right? Now, that's because they're putting in 1 year. But if you said, okay, how about if your goal is 20% per year for the next 10 years, right? That feels like a good mindset to be in. I think you would make much different investment decisions if that was your mindset versus if every year you're chasing 100, you know, 2x, 5x, 10x, 20x, 100x that a lot of people in crypto chase, right? What that leads you to is it sort of leads you to a downward spiral where you don't get it, right? And then you take bigger risks and then you don't get it and your capital depreciates. You continue to take bigger risks and you just diminishing returns, right? And you just slowly go dwindle to nothing. It's interesting there's so much value in the simplicity of Buffett's trading investment philosophy. And that's always been what stood out to me.
Yeah, I've lived that personally. Like I started trading in the '90s and like made a fair amount of money and then lost it all in .com stocks in 2000, which at the time was kind of like yeah, well that's annoying, but I'll make it back. But now, 30 years later, I think, well, if that had been compounding for 7% for 30 years, like I would have a lot more money than I do now, right? But I was, chasing the 100% and 200% that you could do in .coms in 1999, and I think that's more true now than ever because when I was a trader in the '90s, like trading was really fun because it was human versus human, and you could make money by just being a little bit quicker than the next human trader. Like you could see a headline. This is before Bloomberg even. You could see a headline in Reuters, and if it was a good headline, you could like quick buy a stock before everybody else did, and you could make money. Like now you're competing against computers and you have no chance. So there are no arbitrages left in risk assets, really, maybe in crypto, but in equities at least, there's no arbitrages left. The last arbitrage is time. The only way to arbitrage markets is just to wait them out, like to be invested longer than everybody else, which is what Buffett has done.
Byron, thanks so much for joining us today. Appreciate your insights, and shout out to you and the whole Blockworks team for everything that you're doing for the space.
I appreciate that. Thanks for having me on.
Before I let you go, I got to tell you guys quickly, we got a partnership with OKX happening right now. Why do we have a partnership with OKX? A few reasons. One, they've got one of the best centralized exchanges in the space, cost efficient to trade on, secure and trustworthy. And they got some really innovative tools that make it super simple for you to do your trades. And the other reason we partnered with them is because they're giving away $60,000 in USDT right now. And if you click the link in our show notes and go trade on OKX, you could get your chance to win 60K, which would be pretty nice. You could have bought a whole Bitcoin a few weeks ago. Not anymore. Maybe not quite a whole Bitcoin, but pretty close. Now you can buy half a Bitcoin. So you might want to do that. Check it out. Thanks for listening in, everybody. Have a wicked awesome day. We'll see you back again. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.